From Sydney to Athens, then on to London and Tokyo, the Olympic Games have transformed cities. So what will the 2032 Brisbane Olympics mean for property investors? I'm Tim Graham and the Property Playbook starts now. In today's episode, we're diving into the Olympic effect and what it means for the future of property in South East Queensland. Joining me at the desk today is Dan Peterson, CEO of iBuyNew. Dan has co-authored a brand new report exploring how the Brisbane Olympic Games are already reshaping the real estate market across the Sunshine State. Dan, thanks so much for joining us today. How are you?
Great, Tim. Thanks for having me.
That's all right. Well, why don't we get into, let's talk about, this report sort of talks about the growth that's already happening off the back of the announcement of the Olympic Games. What are you seeing?
Yeah, I mean, there's been, obviously the last 3-4 years, been very significant growth in South East Queensland, no question of that. Almost across the board, where you talk Gold Coast, Brisbane, Sunny Coast, all of it's seen really solid growth. One of the things I think worth calling out right up front is when you look at the lead time on the Brisbane Olympics between announcement through to the Games in 32, it's actually an 11-year period. It's unusually long. When you look at all the other host cities from at least the last 25 years, they're normally around 7 years between announcement through to the Games. So there's a longer period of time here in the lead up. But we've definitely seen some of that growth already from on the back of the announcement. I kind of, in football analogy terms, maybe think we're at quarter time. I think there's still another 3 quarters to run in this cycle. One of the things that's probably a little bit hard to kind of work out is, is that growth over the last 3 or 4 years on the back of the Olympic announcement, or is it just due to the fundamentals of the property market? Because we know that the South East Queensland market, the fundamentals are very strong. Immigration numbers are super strong. You've had tight housing supply. So those lead generally to capital growth, those factors. Then overlaid with all the infrastructure spending and then the Olympic announcement, we are seeing really strong growth. So you only really need to study what's been going on in these other host cities from the last 25 years, and you can see the effect of the Olympic Games in Brisbane and that Southeast Queensland market is going to be really, really big.
Yeah.
Yep.
So you use the football analogy quarter time. I mean, we've already seen 50% growth since COVID in the Brisbane market. How much more do you think the Brisbane's got to go?
Yeah, it's a great question. It's probably hard to give a direct answer. No one's got the crystal ball, but I think, look, clearly if you'd invested in the Brisbane market or South East Queensland market 3 or 4 years ago, you've done really well, and you're better off than investing today. But it's definitely not too late. We certainly think that when you look at the other host cities and what happens in terms of capital growth leading up to and post the Games, there's a kind of a 10-year window, sort of that 7 or 8 years leading up and the 2 or 3 years post. That's where you can see up to about 150% capital growth. When we studied all those, you talked before about London, Athens, Paris, Tokyo, all of those cities saw very, very similar trends of about 150% price growth in the 10-year period straddling either side of the game. So I think, yes, definitely South East Queensland's seen 40-50% price growth over the last 3 or 4 years. What is still to come, I would say, is still a doubling of that capital values. I think if people are investing in the Brisbane market now and they invest well, they should be able to see pretty much double the capital growth or double the property value over that sort of 7-year period leading up to the Games. One of the things I think we've got to think about in terms of Brisbane is that it's not like London, Paris, Tokyo, Athens that are already on the world stage.
No, that's right.
They're cities that everyone knows, they're household names. While we in Australia, we think, everyone knows Brisbane. Brisbane is not well known in North America, in Europe, in Northern Asia. You speak to people in those countries, they might know Melbourne and Sydney, maybe they've heard of Canberra, but really Brisbane is a pimple on the back of the earth. And so that's all going to change, and it'll change forever come 2032 when the Olympics roll around and there's a 2 to 4 week block where it's shown in all of its glory. And I think Brisbane will be a massive beneficiary on the back of that. When people are thinking about migrating to Australia, they won't be thinking about Sydney and Melbourne. They'll be thinking first and foremost about Brisbane.
It's quite a unique opportunity, really. I mean, when does a second or third tier city actually get an Olympic Games like Brisbane? Like, that just doesn't happen, does it? It
is unique. There's no question. And even, I think on some of these bigger geographical countries, I think the US is probably a comparable here. And you look at something like Los Angeles. I think Los Angeles is number 3 in terms of population size in the US.
I don't think a lot of people even know the capital of California.
No, that's right. So Brisbane is unique. There's no question of that.
Yeah.
Yep.
Okay. So we sort of talked about the growth that we've seen in the real estate market, but what about money going into the state in terms of infrastructure? Where's the money going?
Yeah, I mean, the spend in terms of infrastructure in South East Queensland is huge. I mean, at the moment, there's a $110 billion infrastructure program over the next 7 years that the government is looking to implement. When you break it down and have a look at the infrastructure related to the Olympics, there's about $20 billion of that relates to the Olympics. About $8 billion of it relates to stadiums, stadium upgrades and sporting facilities. There's about another 12 billion that sits alongside that relates to transport and connectivity. So
even hospitals. Yeah.
And hospitals, right? So there's a massive amount of investment going to that South East Queensland market. Look, that's a similar trend when you look at the other host cities over the last 25 years. There's massive infrastructure spend, but it's normally sitting between about 5 and 10 billion Australian dollars. So in Australian dollar terms, what we're seeing in Brisbane is almost double that. Even at the top end of that range, if you look at the other host cities, Brisbane, it's $20 billion program. It's basically double. So it's an enormous program. The areas that are benefiting from that infrastructure is really all over South East Queensland. Like, it's referred to as the Brisbane Olympics.
It's really Queensland
I
Olympics.
think it should be really regarded as South East Queensland Games, but because not only is that infrastructure going to Brisbane and into Brisbane, but it's also the Gold Coast, it's the Sunshine Coast, it's even places like Rockhampton. Some of those regional corridors are really going to benefit from it as well.
I read something recently. The Gold Coast is picking up 400 new residents a week or something.
Yeah, yeah. I mean, I think people forget that. The Gold Coast is changed so much, so rapidly over the last 5 years or so. There was times gone by where it just didn't have that economic, didn't have the jobs, didn't have the job growth to really support it. What you see now is a genuine city in its own right. It's actually a huge beneficiary of migration, international immigration, but it is getting quite a lot of infrastructure spending going on as well.
Well, let's drill down a little bit deeper. So we've got South East Queensland and Brisbane and Gold Coast and Sunshine Coast, but what suburbs specifically do you think investors should be keeping an eye on?
Yeah, that's a really good question. And when you look at the other host cities, the areas that benefit the most are those that are in and around a lot of that infrastructure spending. So the sporting stadiums, some of the transport hubs and other infrastructure that goes in. And it doesn't necessarily need to be in that suburb, but in and around are the ones that benefit the most, and investors get the best returns. So if you think about what's going on in South East Queensland, as we talked about, it's not just Brisbane. It is the Gold Coast, it's the Sunshine Coast. But if we just narrow in on Brisbane for a minute, look, in Brisbane, it's probably those inner suburbs of Brisbane, particularly on the southeast side of the CBD, that we think will see the greatest benefit because of the sporting stadiums, the Olympic precinct. You've got the Cross River Rail and a lot of that transport infrastructure that's going in there. So places like Newstead, like Kangaroo Point, Woolloongabba, East Brisbane, Spring Hill, just to name a few. A lot of those suburbs there we think will do really well, will outperform. But also some of that northern corridor. So the Bruce Highway is getting a huge upgrade. There's also the Moreton Bay Stadium that's going in. So a lot of that infrastructure that's going in for the Olympics is not just Brisbane, it is north of Brisbane. And then we shouldn't forget about the Gold Coast and Sunny Coast. So it is hard to narrow it down to one or two suburbs. There are a number of them, but it is very important to focus on the areas that are probably in and around some of that Olympic infrastructure. So
interestingly, a couple of those suburbs you named, that's really typically what we would think as a unit market. How are units performing in the Brisbane market?
They are. Like, if you think about places like East Brisbane, Woolloongabba, Kangaroo Point, Milton, that they are very high in terms of density for apartments and highly sought after for apartments. So the little challenge when it comes to housing supply is there's not many sites in a lot of those locations where they can do new developments. So when they come up, they sell super quick. There's wait lists. What we've seen in capital values in those areas is astronomical price growth over the last few years. Now, will that continue?
Unprecedented in some locations too,
Definitely. And I think we will see that continue because a lot of the infrastructure is yet to happen. A lot of that spend is yet to happen. It will happen over the next 4 or 5, up to sort of 7 or 8 years leading into the Olympics. So a lot of that growth is still to come, in our opinion. The demand is still there for those blue chip inner suburbs. There's no question about that. But on the supply side, it's so hard for new developments to get up. There's a whole range that the locations aren't there, the sites aren't there.
Yeah.
The approvals are quite hard to get through. But even when they do, a lot of the developers can't get the construction firms, the trades to actually get them done.
Yeah.
So
it's not getting off the ground at all.
That's right. So tight, supply is super tight.
And obviously, Dan, iBuyNew specialist in the off-the-plan space. What are you seeing in the Brisbane market and I suppose Gold Coast and Sunny Coast markets when it comes to buying off the plan? Is it the right time to be looking at that type of investment?
Well, firstly, as our name suggests, iBuyNew, we're deep believers in investing in new and off-the-plan property. And there's a few reasons for that. I mean, first and foremost, you can get into the property market with a 10% deposit. You don't have to have all your capital invested on day one. You can have 10% down. A project might be settling in two or three years' time, but you're picking up that capital growth over that period with only 10% down. Yep. The other thing is that when you typically look at the rental yield, and rental yield's not everything, but it's important when you're holding an asset for 5, 10, 15 years to have it to keep that in mind. And the rental yield you can often see on new and off the plan property is often running at sort of 5.5%. Established properties, particularly older properties, that don't command that premium, they're often seeing 2.5%, 3% rental yield. So there's a number of benefits.
Depreciation too.
That's right. And people that actually understand property investment, those savvy investors, really understand the power of depreciation. And that is big. When you look at a newer off-the-plan property, often the depreciation claims are 20, 30, 40,000 a year, rather than $1,000 or $2,000, maybe $3,000 on something that's old and established. Yeah. And so your after-tax returns.
Tax rulings a year or two ago said that you can't pick up depreciation on fixtures and fittings as a second or third owner as well. So being the first owner, you're going to increase your depreciation.
Yeah, exactly.
Okay. So I know you talked earlier about previous hosts of the Olympic Games. What have we learned from those cities?
Yeah, there's some really good learnings. I think there's sort of 4 or 5 things worth calling out. The first is when you have a look at all the host cities, typically they create jobs. So these Olympics create normally between 100 and 200,000 jobs, and that's what is being forecast as well for Brisbane. And that's not just jobs for that 2-4 week period of the Olympics. It's lasting jobs to operate the infrastructure, operate the sporting stadiums, maintain them, etc. So there is significant job growth. That's the first thing. The second thing is when you have a look at the infrastructure that's going in, it's normally in that $5 to $10 billion of spend. It was touched on before. Brisbane and South East Queensland have $20 billion being spent on. So it's basically double anywhere else we're seeing. So that drives, we know, one of the fundamentals of property investment is that infrastructure spending drives growth, drives capital values, and we're going to see that more than ever in South East Queensland. The next thing is that when you study the growth you see in these markets, normally this growth of 150% over a 10-year period is double that of the country that it resides. So take somewhere like Athens, that had about 150% price growth over that 10-year period leading up to the games and straddling the games. The rest of Greece saw about half that. And that's very, very similar. Same with Sydney back in 2000 and the leading up to 2000. Very, very similar trend there. So there's a number of things that you can learn from these other host cities by studying them. What will happen in Brisbane and South East Queensland, we don't see being any different. If anything, we probably see it being actually stronger growth because the fundamentals of some of those markets are nowhere near as positive of what they are in South East Queensland, specifically in Brisbane.
I agree with you. And look, I know this report's got a lot more detail on that and each of those host cities. If somebody did want to get a copy of that report, Dan, where could they find it?
They certainly can get it through our website. They can go to iBuyNew.com.au and they'll be able to find that report there.
Terrific. Thanks so much for joining us, Dan.
Thanks, Tim.
Well, folks, that's the play for today. This episode has been sponsored by hotspotting.com.au. This is Ticker. We'll be right back.